Hi, ladies and gentlemen. Welcome to Dad's Market Stats. And before we start the video today, I just wanted to mention, as always, this video is for educational and entertainment purposes only. It is not a suggestion to buy, hold, or sell any assets. Please do your own due diligence and research when choosing what to invest your money. So in today's video, I wanted to discuss companies that we could potentially start using the wheel strategy with. So as you know, the wheel strategy means that you sell put options with the hope of buying shares at a discount, and then you complete the wheel by selling a call option with the hope of selling those shares for a profit. So which company do I want to talk about today? Well, let me share my screen so you can see. This company is JetBlue Airways. Now, the reason this company would be a good company to start using the wheel strategy with is because it's been coming down in this last year. As you can see, it was at its peak at around $9 in July 2023, and it's been coming down since then. But JetBlue Airways has periods of time where it goes up and down. It's a very cyclical stock. As you know, the airline industry, there are periods throughout the year when many people travel during holiday seasons toward the ends of the year. In the summertime, they like to travel, go on vacation, visit places, or visit family members. So there's periods of time where lots of people travel. The company makes a lot of revenue. But there also is periods of times when very few people travel. And so the company is not going to make a lot of revenue during those times. So their stock price comes down during those times. And then it goes back up in different periods of time. But there's other pieces of information, other announcements and pieces of news that have caused the stock price to come down recently. As we know, the company was trying to buy out Spirit Airlines, one of their competitors. And if they were successful, they not only would have been able to eliminate one of their competitors, but they would have been able to charge a little bit more on their airline fees. And so since that merger plans fell through because one of the judges denied that opportunity for JetBlue, they didn't allow them to buy Spirit. However, JetBlue was planning to appeal that decision. But then later on, they scrapped it. They decided to scrap that project because they figured it was going to cost them more money and it was just gonna keep dragging on. So they decided to scrap that, and their stock price took a little bit of a hit after that. Now, some more bad news we had recently on their earnings report. They didn't have a good earnings report in the first quarter for the year 2024. Although they did beat on earnings per share estimate, you can see here it was estimated to lose 52 cents per share, but they actually only lost 43 cents per share. So they did beat on expectations. However, their earnings report was not too good. As you can see here, it says during the first quarter of 2024, their revenue was 2.21 billion, down 5.1% from the same quarter last year. Their net loss, 716 million. Their loss widened by 273%. So they didn't have a good earnings report this quarter. So that also caused the stock price to take a little bit of a hit. So, but as we know, again, airline industry is very cyclical. It goes up and down throughout the year. So if you decided to use the wheel strategy with JetBlue, let's take a look at some options that you could sell today. So let's take a look at JetBlue options. We're going to start the wheel by selling a put option. Now, the put option that we're going to be looking at is the $6 put option. Why? Because this put option will give us the opportunity to buy 100 shares of JetBlue at a discount. But we're going to look at contracts that are expiring a month out. So let's take a look at the May 31st options here. So in order to sell this option, we would need to put $600 into our broker's account. Why? So that we can have $600 being held as collateral. Because when you sell this put option, you're agreeing to sell 100 shares of JetBlue shares at $6 per share. So that's why you need $600 to be held as collateral. Now, if you sold this put option, somebody will pay you 45 cents per share to buy this contract from you. So that means that if they're paying you 45 cents per share or $45 for 100 shares, that means that you would really be buying shares of JetBlue at $5.55, right? Because you're buying it for $6, but somebody's giving you 45 cents. That means you're really buying it for $5.55. Now, if we take a look at the current price right now, it's sitting at $5.76. So you would be buying them at a discount if by the time this contract expired on May 31st, shares of JetBlue were still trading below $6 because that's the strike price. So you will be buying them at a discount. Now, if JetBlue went up to $5.95, you would still be buying it at a discount because it's not above $6, which is the strike price. The only way you would not be buying shares of JetBlue at a discount is if the share price went above $6. Then you would not be able to buy the shares of JetBlue. However, you would get your $600 back from collateral, and you would get to keep the $45 that you made by selling this contract. But we're trying to talk about how we can complete the wheel with this company, right? With this stock. So let's assume that you were able to buy 100 shares of JetBlue for $6, and you made $45 on your $600 investment already. You made already $45 there. Well, the next thing you would do to complete the wheel is sell a call option, which means that you would be selling your 100 shares for $6. Okay. So wait a minute, we bought it for $6 and we want to sell it for $6. How are we making a profit? Well, we're making a profit because somebody's going to pay us an extra $25 to sell our shares of JetBlue for $6. So do the math, ladies and gentlemen. We received $25 here, and we also received $45 here. That's $70 that we're receiving on our $600 investment. That's close to 12% return on our investment in 2 months. Now, if we repeated this same cycle 6 times, right? If we repeated it 6 times and we were able to complete the wheel 6 times in the year, that's close to 70% return on our investment. Now, 70% return, what bank is going to give us that in a year? I think the most that the bank will offer you to give you in a year is 5% of return on your investment, right? So definitely we could earn more. We could earn more from our investment if we were to sell these two options here. All right. So this is a good way to complete the wheel strategy with JetBlue. Now, let me know what you think, ladies and gentlemen. Let me know if you're planning to use the wheel strategy with JetBlue, or if there's another company that you would like for me to talk about that you would be interested in using the wheel strategy with. Let me know so I can help you see which options you could sell that will help you to make a good amount of interest on your investment, on your capital, by using the wheel strategy. Let me know in the comments below what you think. You can also find me on Instagram, Facebook, and X, formerly known as Twitter. And if you like this video, give it a like, share it with your friends, your neighbors, your coworkers, anyone who you think might be benefiting from this information. Share it with them. Help this channel get more subscribers and help me get more views on these videos so that many, many more people can benefit from it. So I hope you benefited from it. If you did, like the video, please. So ladies and gentlemen, that's all for today. I hope that you have a great weekend, and I'll see you on the next video.